Hey folks, Nick here doing the preview for the week, just so we can get ready. Happy holidays. Hopefully, you had a good holiday weekend, long weekend. We're coming into Tuesday. So, this is going to be a short week. And for me, if I were to describe this week, it would be guarded optimism, not cautious optimism, very skeptical optimism at this point. So, we have had, let's recap how we got here, 8 straight weeks of greens in a row. I believe that's a recent record, and coming into the ninth. And if I counted correctly, we had one red day in the S&P in like 2 weeks. So that's a lot of greens. The longer we go without a pullback, the more days, the more the drops will feel painful. Remember back to this past week, we had one red day, and I had dozens and dozens of panic messages. Like, what do I do? How did this happen? And it was one day. We were down like 1.5% one day. So the longer we go without any pullback, the harder those days will be. So that's why I want to be in a guarded optimism state. Wait and see. What does that mean from trading perspective? I don't want to start anything new for the long term. Like if somebody told me I have $5,000, I want to invest in Microsoft, and they put all of it right here, right now, I think they're most likely making a mistake. If you can't wait, then get engaged with like 20% of the size. That would be my case. If I'm long and I'm leaving runners and I want them to go a little bit higher, maybe that's fine. I've booked some profits, even in crypto, and I've left a core position on. So now that we're at our goals of new all-time highs, what do we do here? I think we should wait and see. So what clues are we looking for? Now, you know me, I've been focused on the IWM. First, before I get off of the SPY, this is the S&P. It looks just like the QQQ and just like the DIA, clustered around one candle, the one red day from the 20th. We have the 20th. The size of the candle engulfs everything before it and everything after it. This narrow range, and that is a technical term, will result usually, often enough, in a big move, up or down, we don't know. It's kind of like a long doji. So we'll see how that plays out. As far as the IWM, the small caps, it looks like it's leading. It was up the most last week, like 2.5% or whatever. But if you zoom out, it is lagging big time. It's just coming out of a box. If you can picture a box right here, and they're trying to get out of it. They've been stuck in it for a year more, and they need to break out. And they still have to deal with all of this when the other indices have made or at the edge of making a new high. So we have to look at, within the IWM, at stocks like Upstart and ARK Invest ETFs like ARK-K. What are they going to do? Okay, Upstart was a little weak on Friday. ARK-K wasn't. Fear, the VIX. There's no respect for fear. Nobody's worried about anything. The VIX crashed on Friday into the low of the day. It gapped down before the bell rang and closed at 13. The average is 19.6 or 19.7, the lifetime average. These are levels from Bernanke when he had full-blown QE. So the message from the Fed was perceived as super dovish, to where we have a QE coming next week at some point. I don't know if we should, but that's the body language. So the IWM is looking to catch up and break out, and it has 10 to 15% room, but let's have them start it first. Okay, so if these guys are going to continue higher from here to here, who's going to lead the S&P and the QQQ? For that, we will look at the mega caps. So I'm looking as to why is Microsoft lagging now. It broke out first, and now it's stalled. Why did Apple come within an inch of an all-time high and a $200 number and fail? So Apple body language says it could lose 4 to 5% and still be okay. It would be here. Not the end of the world. So look at the body language of stocks like this versus stocks like Amazon, which is catching up and behind, far away from an all-time high. Alphabet is somewhere in the middle. So the mega caps will play a role. Where is NVIDIA in that as well? NVIDIA infects all the tech, the brains of the operation in tech, like the Intels, the processing power. And innovation. So we're going to look at the small caps. We're going to look at the large caps. and I'm going to wait and see for the most part. I have some trades, but they're on the indices and they're range-bound trades. I've sold some call spreads. I've sold some put spreads, trying to balance them out. A little bit more call spreads than put spreads, which puts me at risk this week. All right, so the strategy is wait and see, while not committing new longs too far out or in size, without leaving room to add later, and not shorting left and right because I disagree with it. Very tempting. I've said it before. The bulls are too confident and the bears are too upset. Both are emotional. We tend to make mistakes when we're emotional. So what's wrong with wait and see? People feel like they need to trade every week or every day. You can trade every day. You don't have to make trades every day. I manage my portfolio every day, but I don't have to initiate new trades every day. All right. Hopefully we covered everything. I'm not sure if oil is playing a part. Crypto is. Crypto is super strong, super strong. So are they at the tail end? I know some crypto stuff is at targets. So maybe they want to rest as well. So look out for some headlines coming out of nowhere. What? I have no idea. But that's how it usually goes. Everybody is super confident, and then we get thrown a wrench out of nowhere. All right, so I'll update us middle of the week. Hopefully we all have a good one this time.